What are some big, hairy, audacious financial goals that you should go after? What are the big financial goals that, wow, if you could achieve this, boy, you'd really be making amazing strides in your financial life. I'm going to help you with those. I've got 5 of them coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so yesterday I did a video about Dave Ramsey's 7 baby steps and how they're great principles, but it's inadequate. It's not a comprehensive financial plan. If you just follow the 7 baby steps, you're missing a whole bunch of stuff. And it just got me thinking. I think most of us would hope that we could put 20% down on a house so that we're not paying PMI. I think most of us would hope that we can save 15% for retirement. And those are sort of the common financial goals that many people strive for. But if we were to break down sort of those limitations or scripts in our mind to just go after some big, extreme financial goals, what would they be? What are some big, extreme financial habits or goals or recommendations that I would have for you? Thinking big, just blowing out kind of normal preconceived notions. Some of these are going to sound familiar, but I got 5 of them. Okay, let's get into it. Number 1, you've heard this one before, and no matter where you're at, I would stress this one, and that is live off of just one income. Live off of just one income. Okay, if you are a dual income household, find a way to live off of just one. Now, does that fit nice and square in a box where, okay, yep, there's a baby step that fits with this or a financial principle that fits with this? No, it's just an easy, tangible goal that helps you make fantastic strides in your financial life. How does it do that? Number 1, it gets you used to living off of less than you make, okay, which is just a foundational habit. There's no way you can build money unless you spend less than you earn. That's it. And this is an easy way of doing that. But then second, it allows for a large amount, hopefully, of goal achievement dollars that you can use to save up for retirement, for college, paying off the debt, whatever your other goals are. So the first kind of big, hairy, audacious financial goal that I have for you is if you're a 2-income family, I'd live off of one income. Live off of just one income. You're not going to get in financial trouble doing that. You'll make fantastic strides doing that. Now, what if you're a 1-income family? Well, then we're going big. How about you spend 50% of your income? Okay, I mean, that's sort of the principle of this only spend one income. It's all right. You're both earning something. Well, just save just one of those. Okay, so live on half. So if you're just 1 income, try living on half. Now, you might listen to either one of these and say, Mike, not possible. Thumbs down. I don't, that doesn't work for me. That's okay. It might not work for you right now. These are big, hairy, sort of expanding your mindset financial goals. So wherever you're at with this, can you start taking that next step to sort of get you closer from wherever you are, get you closer to where that is, to being able to live off of just one income or being able to live off of 50% of your take home. That'd be one big, hairy, audacious financial goal that I would have you strive for. The second, and it seems even bigger right now with what's happened with car prices, especially used car prices, but pay cash for vehicles. Pay cash for your vehicles. And again, this is not to shame anyone. I've had not student loans, I've had car loans, okay? It's car loans, that's what we're talking about. And that's okay. So it's not like, well, if you use a car loan, you need to feel bad, or those of you that are leveraging money and say, well, geez, why would I pay something off that's only costing 3.5% or 4%? I should use that leverage. Okay, that's fine. But a way to expand your thinking or a way to create sort of a big, hairy, audacious goal wherever you're at now, what if you just committed to, I'm paying cash for every vehicle from here on out, not getting a car loan again. So that does a couple of things. Number 1, it helps you pay yourself first, saving up in advance for whatever that car purchase is. Number 2, it puts a natural governor and a natural timeline as to when you'll replace your vehicle. Vehicles are so emotional, especially with all the technology and upgrades that they get. I mean, my goodness, as soon as you have a vehicle that automatically connects to your phone, that Apple CarPlay, the fact that you have to plug it in or press a couple buttons to get to Bluetooth seems like you're a caveman. Like that seems, when you can walk into your car and turn it on and it's automatically digitally connected, electronically connected to your phone, that's like, we've arrived. And anything less than that seems so, subpar. But guys, this saying I'm gonna pay cash for my next vehicle allows you to set aside those emotions and say, well, I can't wait to get that feature, and I'll earn it, I'll get that when I'm able to write cash, or write a check, pay cash for that next vehicle. Met with tons of folks where we've laid out this goal where they've said, and they kind of scoff. It's like, I would love to do that. It will never happen. And it happens, okay? Big, hairy, audacious goal number 2, pay cash for your vehicles. Third, have a 15-year mortgage. 15-year mortgage instead of 30, okay? Or if you say, well, I'm sort of past that, or I don't know if that works, be debt-free, be mortgage debt-free by age 50. And again, this isn't just, hey, these are normal financial goals everyone should be striving towards. No, these are big, outside the box financial goals that maybe could be used by you to either encourage you or make huge strides in your financial life. What if you took that mortgage from 30 years down to 15? Now, again, you might say, well, wait a second, I'm not leveraging properly there. Why would I do that? Well, it reduces the risk in your overall financial life. And differently, if you said, well, I can't really do that, but what if I I had a goal of being debt-free by the age of 50? Well, then if you can achieve that, then you've got those empty nester years, those last 10 to 15 years before retirement, where you've got extra resources to go towards building up that goal. You'll have extra margin and extra resources. Is this goal for everyone? No. But if you're looking for some extreme, motivating financial goals, have a 15-year mortgage, or find a way to be debt-free completely, including the mortgage, by age 50. Do the math with your certified financial planner. Make sure that fits. If in order to do that, you can't save for retirement, or you can't do some of the other things financially that make sense for you, then don't do it, right? Financial progress, your financial success is so much measured in balance. Being able to do the things that you can and want to do today while doing the things that you should be doing for tomorrow. It's about balance. And if one of these things throws that balance off kilter, then I would say, take great caution before implementing. But if you can, have a 15-year mortgage or find a way to get debt-free by age 50. Fourth, and I would hope this for all of you, and if this ship has already sailed, then pick it up right now or help your kids with that. And that is max your Roth IRA contributions from the very first job you get. Max that Roth IRA from the very first job you get. Now, we've done some videos recently about what are those contribution limits. Now, the IRA and Roth IRA, they share a contribution limit, and it is you can contribute up to 100% of your earnings. How much did you earn at a job, okay? But then you're limited to $6,000. So if you are, your first job while you're in college or right out of college, or you're just working part-time or something like that, you earn $3,000, you can put $3,000 in a Roth. If you earn $8,000, well, then you've hit that $6,000 limit, okay? But from your very first paycheck, maxing that Roth IRA. Why? Because from your very first paycheck, you likely have small income, unless you're Mark Zuckerberg, and you've got a long time for that money to grow tax-deferred and tax-free, and you'll be able to capitalize on that tax-free growth through all that compounding. From wherever you're at, if you've never had this habit before, maybe it's something you can help your kids with, or maybe it's something you can start with right now. Max that Roth IRA from your very first opportunity, your very first job, for the rest of your career. And then the fifth big, hairy, audacious financial goal outside the box that I would just kind of challenge you with: never, ever, from this moment forward, pay interest on credit cards. Never, ever. There's people that play the game, and the shell game of leveraging money and so on. Well, I can get this, 0% interest here, and then this, and then I can apply for this card and get 4% back here, blah, blah, blah. If you can do that, fantastic. Oftentimes that takes a lot of energy, and it ends up catching up with you at some point. I like simplicity. You have a credit card that gives you good points. Mine is 2% cash back. It goes right into my trust account, goes right into my Roth IRA. I've done a video about that before. The Fidelity Signature Visa card. It's automatically 2% on everything, and it's not I get a vacuum cleaner or I get a gift card. No, it's cash back that goes directly into my investments. Fantastic, easy. But the point is, if you're using credit cards for that gamification and getting some rewards, Well, in order to win with those rewards is you've got to not pay interest. So what if right now, from this moment forward, you structure things in your financial life where you never, ever, ever, ever pay credit card interest again? And if you say, well, I'm sort of past that, Mike, institute that leadership for your kids or for your grandkids. Find a way. I mean, this is unconventional. It's sort of countercultural. Every day you can watch TV and see pretty fantastic commercials about credit cards and rewards and all sorts of that. So I don't know if you can get through a commercial break without seeing something about some rewards with credit cards. Don't pay for those rewards. Earn them. Don't pay for them. Ever, 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 okay? So big, hairy, audacious goal, never pay interest on a credit card. Structure your financial life, work with your CFP to do that. What's the way? It's the 3 bank account system. That 3 bank account system has a budget, a delayed spending, an emergency fund all built in together, working harmoniously so that you never get behind and would need that short-term loan credit card where you'd be paying those credit card interests. 16.5%, 14%, 21%, 26%. Never, ever, ever pay interest on a credit card. Okay, I don't know where that hits you, right? You might just be, kind of trudging through the mud right now, and hearing some big, hairy, audacious financial goals might be demotivating. Listen, Mike, that's not where I'm at. I'm in the grind right now, trying to work on these couple goals. That's fine. That's fine. Maybe use this as motivator for future. Come back to it in the future. But for those of you that are making financial progress, could be making more financial progress, and needed that extra push, like how could you take it to the next level? Consider these 5. Is it just these 5 that are big, hairy financial goals? No. Work with your certified financial planner. Say, hey, what's the next thing I could be striving towards to reach financial freedom or financial peace sooner, or maybe to be that much more ahead of the game if some sort of unexpected occurrence takes place? What are some big, hairy, audacious financial goals that I could consider? Hopefully these 5 get you on your way, but talk to your CFP. If you don't have a CFP, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well. Or send us an email, info@Korhorn.com. You want to add to this list? Don't like the list? Would you add something else? Would you disagree? Great, fine. Leave comments below. Love to hear them. All right, there you go. Go out and take your next wise step in your financial life.